Hey guys, welcome back to the channel. There's no other way I can start this video than saying, wow, what a month. The stock market tends to be volatile in the short term, but over the last month it's felt different to the usual volatility. It's felt like a roller coaster. The end of July and start of August saw a huge stock market decline, with the S&P 500 having its worst day in nearly 2 years on August the 5th, when it fell by 3%. However, the stock market has since made a full recovery, and the week before I recorded this video, the S&P 500 had its best week since November 2023, being up by 3.9% in that week. Given all these market movements, the value of my portfolios will have likely changed a lot over the past month, and in this video we'll provide an update on how my InvestEngine, Monzo and Trading 2 and 2 portfolios are looking now. To achieve this, we'll split the video into 3 parts. We'll firstly provide a market update. Secondly, we'll go through the individual InvestEngine, Monzo and Trading 2 and 2 portfolios one by one. And then thirdly, to finish the video, we'll go through the collective portfolio performance. Before we begin, if you're new here, I'm Alex, a management consultant by day, and on this channel we like to discuss all things personal finance, with a particular focus on how to grow your money. I have a goal to reach a 100k portfolio within the next 2 years. And if you'd like to follow my journey, as well as getting a bunch of other personal finance related content, then I'd greatly appreciate a subscribe. But for this video, let's get into it with the market update. Over the last month at the time of recording, the FTSE 100 is up by 2.35%, the S&P 500 is up by 1.03%, and Europe's Stock 600 is up by 0.74%. On paper, these figures suggest it's been a great month, but they don't tell the full story. As we went through at the start of the video, the stock market saw a big decline at the end of July and start of August. In fact, if we look specifically at the S&P 500, we can see a huge drop between Wednesday the 31st of July and Monday the 5th of August. Over 6% was shedded from the S&P 500 during these few days, which is a significant decline. And the decline was even worse for the tech-heavy Nasdaq, as it went down by over 7.5% during the same time period. This bad performance wasn't a one-off either, as there was multiple weeks of declines. For example, the S&P 500 had 4 back-to-back weeks of being down. So what caused all of this? Well, to keep it short, there was one main reason, in that market sentiment was becoming increasingly fearful of a US recession, following job growth data slowing more than expected in July, and unemployment figures being higher than expected. The recession fear in the US also heavily influenced the performance of other markets. This is because the US economy is the biggest in the world, so its performance has a large impact on the global economy. One country in particular was impacted in Japan and their Nikkei 225 index, as this index fell by 12.4% in one day on the 5th of August, which equated to the worst day for this stock index since 1987. However, the good news is that this bad performance didn't last, as there was welcome good news in the US economy in mid-August, with a run of data pointing to strong US sales and lower than expected jobless claims. This was coupled with data showing that inflation was falling, with US CPI inflation data falling to 2.9% in July. All of this boosted investor confidence in the US economy and led to positive stock market performance, with the S&P 500 having a great run between the 7th of August to the day I recorded this video on the 19th of August. And within this run, it's had its best week of the year between the 12th to the 16th of August. So overall, although it's been a roller coaster, at the time of recording, it's ended up being a positive month for the markets. Now we know this, let's move on to part 2 of the video and take a look at how my portfolios have performed. And let's start with my InvestEngine portfolio. We can see my InvestEngine portfolio has a balance of £30,093 at the time of recording. And in terms of the performance over the past month, it's in the green. It's up by £311 in pound terms and 0.19% in percentage terms. We can use the graph here to see exactly how the portfolio has performed. We can see it started the month with a value of £28,282, then it crept up to a peak value of £30,109, then the wider stock market decline happened and the portfolio value went right down, but since it's climbed back up. So this graph is quite similar to the S&P 500 and the wider market generally. Across the last month, if we tally the portfolio value at the start of the month and the end of the month, there's a difference of around £1,811, and of that, £1,500 came from my deposits, and £311 came from an increase in the value of my investments and also dividends. I had some dividends over last month. If we head over to the dividends tab, we can see I had £97 in dividends. And because I had the auto invest option on, this cash will automatically be reinvested into my portfolio at my chosen weights. So overall, I'm pleased with the performance over the past month. I'm in the green during a rollercoaster month. Let's now zoom out using the max tab to see how my portfolio stands since I started investing in it. We can see that I'm up by £2,642 in pound terms and 17.68% in percentage terms since I started investing in this portfolio, which was 2022. Now we know the performance over last month and the overall performance of this portfolio. Let's take a look at how the individual ETFs making up this portfolio have performed over the last month. And let's start as always by taking a look at the MSCI World, which is the largest ETF in my portfolio. This ETF is up by £81.70 in pound terms, and it's down in percentage terms by 0.02%. If you're new to InvestEngine, you may be wondering how can you be up in pound terms but down in percentage terms? And the reason for this is because InvestEngine use different calculations for these two metrics. InvestEngine use a time-weighted return for the percentage return, and this can lead to these scenarios where you can be up in pound terms but down in percentage terms and vice versa. But coming back to the performance of this ETF, it's been relatively good for this ETF, and it's been largely influenced by what's happened in America, given that most of this ETF is exposed to American stocks. The next ETF is also in the green in iShares MSCI Emerging Markets. This is up by £35.92 in pound terms and 0.57% in percentage terms. However, the iShares MSCI World Small Cap didn't have as good performance. It's down by £6.69 in pound terms and down by 1.43% in percentage terms. The next fund in my precious metals fund, the iShares Physical Gold, was in the green over the past month. It was up by £55.95 in pound terms and 1.53% in percentage terms. And this made it the best performing ETF in my portfolio in percentage terms over the past month. The final ETF was the worst performing ETF in my portfolio in the cloud computing fund. It was down by £16.14 in pound terms and 2.78% in percentage terms. And as we spoke about in previous videos, I expect higher volatility with this fund compared to the other funds, because this is less diversified compared to the other funds, is focused on one sector, and has less stocks in this fund compared to the others. And it had a good month last month, so I kind of expected a bad month to follow, especially given what's happened in the wider market and the fact that these tech companies tend to suffer bigger swings during these high volatility market movements. But nonetheless, overall, my portfolio is up over the past month, and the performance of the 3 ETFs in the green outweighed the performance of the 2 ETFs in the red. Before we finish the InvestEngine portfolio update, I want to point out one change I've made to the portfolio going forward. And that's the fact that instead of doing a monthly deposit of £1,500 every month, I'm going to be doing a weekly deposit with this portfolio. I plan on depositing £350 a week, and I've set up a savings plan for InvestEngine to achieve that. The reason I'm doing this is because I feel doing a monthly deposit isn't getting me the average market price I'm trying to achieve with the dollar cost, pound cost averaging approach. And I feel like setting up a savings plan to deposit every week may give me a better chance to achieve that average market price. So going forward, I've set this up. Let's see how it works out. My next portfolio is with Monzo, and here I'm invested in an adventurous fund offered by BlackRock, which is mainly invested in US stocks. We can see at the time of recording, I have a portfolio balance of £1,385.64, and overall I'm up by 6.59% in percentage terms and £85.64 in pound terms. And we can use the graph feature here to see exactly how the portfolio has performed over the past month, and we can calculate that performance. So we can see that I started the month with a portfolio value of £1,179.86. Then the portfolio followed a similar graph to what we've seen with the S&P 500 and my InvestEngine portfolio, and I ended the month with a portfolio value of £1,385. So there's a difference there of £205.78, and £200 of that came from deposits and £5.78 came from investment growth. So I'm very marginally up over the past month with this Monzo portfolio. But as I said with the InvestEngine portfolio, given it's been a rollercoaster month, I'm just happy to be in the green. My final portfolio is with Trading 2 and 2, and this is my individual stock portfolio. Because I'm recording this throughout the trading day, it means that the values you see for the portfolio value and the individual stock values may change as we go through the video. But at the time of recording, the portfolio has a balance of £812 and the return is positive. I'm up by £223 in pound terms and just over 38% in percentage terms. We can use a graph here to see the exact portfolio performance over the past month, and we can see that I started the month with a portfolio balance of £800 and 15 pence, and I've ended the month with a portfolio balance of £812 and 5 pence. So because I've had no deposits in this portfolio over the last month, there's been investment growth of £11 and 90 pence in the stocks within this portfolio. So now we know the overall performance, let's take a look at how the individual stocks have performed. We can see that all three stocks are in the green overall since I started investing in them, but in terms of the performance over the past month, let's click on each of these one by one, and let's start with Alphabet, Google's parent company. This stock is down by over 8.7% over the past month, and this is despite a recovery at the end of the month. There was a huge drop here on the 5th of August, which isn't too surprising given what we saw with the S&P 500 on the 5th of August too. The next stock is Microsoft, and it's a similar story as with Alphabet. This stock is down by over 5.5% over the past month, and again we can see a huge drop on the 5th of August. The recovery for Microsoft has been slightly better than with Alphabet, so it's not down as much, but it's still in the red over the past month. So that means that I must be in the green for the ServiceNow stock, as I'm in the green overall for my portfolio over the past month. And if we click on ServiceNow, we can see that I'm up by 12.38% over the past month. So really good performance for the ServiceNow stock. And my only regret is not buying more when there was a dip in this stock. As we can see, as with the others, there was a significant dip on the 5th of August, but since then it's had a really strong recovery. So a great month for the ServiceNow stock. And overall, like I've said with all my portfolios, I'm happy to be in the green for the Trading 2 and 2 portfolio, given it's been a rollercoaster of the month. Moving on to part 3 of the video and looking at the collective performance across all my portfolios, I've ended the month with a total balance across my portfolios at the time of recording of £32,291.34, with £30,093.65 coming from my InvestEngine portfolio, £1,385.64 coming from my Monzo portfolio, and £812 and 5 pence coming from my Trading 2 and 2 portfolio. In terms of deposits over the last month, I made 1,700 in deposits in total, with 1,500 going into my InvestEngine portfolio and £200 going into my Monzo portfolio. I made no deposits into my Trading 2 and 2 portfolio. Finally, in terms of the performance of my portfolios, I'm up overall by £328 and 87 pence, with £311 and 19 pence coming from growth in my InvestEngine portfolio, £5 and 78 pence coming from growth in my Monzo portfolio, and £11 and 90 pence coming from growth in my 2 and 2 portfolio. This equates to just over 1% in percentage terms for my return over the past month. A nice perspective on this return was provided by Chaz, the risk on investor, in the comment section of my last portfolio update. He mentioned about viewing this total return as passive income each day, and the return this month equates to over £10 a day in passive income, which I'm very happy with. And overall, I'm pleased with the performance over the past month, given the rollercoaster of a month it was. Let me know how your portfolios have performed. Thanks guys.